Take a moment, look at the disclaimer. This content is for educational, information, entertainment purposes only. Nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We're here just to tell you how we look at the markets, how we analyze the markets, how BTA analyze the markets. And nothing should be taken as a recommendation. This is Rod from BTA, and we are known as the middle traders. We are going to pick up on part 4 of our FAANGMT, Facebook, Apple, Amazon, Netflix, Google, Microsoft, and Tesla. Okay, we don't see how the major market indexes are going to go up if these large mega capitalization stocks, these large, huge stocks don't go up. We don't see how the major market indexes are going to go up because those stocks make up about close to 50% of the NASDAQ 100, makes up close to 50% of the NASDAQ 100, and those stocks make up close to 30% of the Standard & Poor's 500. So they make up a huge, large percentage of these indexes. So if you're making up over half of the index, I don't see how the index is going to go up and go on a large rally, huge rally, when all of these stocks are in the doghouse, taken out to the woodshed. Okay? I don't see how that's going to happen. So we're monitoring. We are definitely monitoring these mega cap stocks, the Facebook, Apple, Amazon, Netflix, Google, Microsoft, and Tesla. And they're starting to look cheap. And I'm not talking about the stock price. I'm talking about to what their real value is worth. So we're going to be going into the fundamentals of some of these stocks also. And these stocks are starting to look cheap compared to their value, what the stock is worth. Not the stock price, what it's worth. It's like a house. A house could be selling for X amount of dollars because the other house in the neighborhood is selling for that. But is it really worth that? Because when you go in there and look at the repairs and everything else that got to be done, what is it really worth? Okay? Is it generating income? If it's a rental property, then you got to take that into consideration. How much income is it generating compared to the amount of debt that it's going to have to service? What is it worth? What is it worth? That's different from the stock price. We see Netflix is trading at $167.54. But is it worth that? Well, we'll be discussing those topics at a later date. That's more value investing. Right now, we're growth and technical investors, right? Technicians, analysts, technical analysts is what we are. We analyze the charts. We analyze the charts. That's what we do. So, this is Netflix. This is a daily chart of Netflix. This is a dangerous looking chart. I'm going to be honest with you. This is a very dangerous looking chart, okay? I'm going to reduce this a little bit, and I hope it's not too hard to see. I'm going to reduce this a little bit because I want to bring this in. Okay, let's reduce this a little more. All right? Let me bring this down a little bit. I want to get a little bit more of this chart action here. Look at these big gaps. Okay? Look at these big gaps. All right? These big downward gaps in stock price. In the stock, look how it gapped down. This is a very dangerous looking chart. This stock has been gapping lately in 2022. It's been gapping down. Well, we don't like a chart that's starting to get into the habit of gapping down because you're telling me that you got a history of doing that. You behave like that, okay? We don't want a stock that behaves like that because we don't want to wake up the next morning and this thing is gapped down on us $50, $60, $100, right? So this is a very dangerous chart. So we got to make sure that this stock is on the good foot and heading back up before we take any chances. Okay? So right now, this is our daily chart of Netflix with our key moving averages. We're not going to spend too much time on here because this is a dangerous chart. So we're not going to spend too much time analyzing Netflix. But this is the next one on part 4 of our FAANGMT, so we got to do it. Now look, Netflix is trying to stabilize here, making a bottom. Okay, we got our 5-day moving average here, but it's below the 5-day moving average. That's not good, right? We need to see an improvement with that. Well, we know all of these stocks are not really looking that great, so we're not going to beat it up too much, right? But when I expand it here, you can see that prices are below the 5-day moving average right now. And the 5-day is below the green 9-day, and the 9-day is below the yellow 21-day. And prices have been going down for the last 4 days. And we got this downward trending 50-day moving average, okay? And we got a downward trending 150-day up here. So Netflix is in clear downtrend. So there's no ifs, ands, and buts about that. It's in a clear downtrend. So we need to be very careful, right? It's not ready for any kind of buy as far as we're concerned. We don't care what's the value of it. The stock chart, the charts are telling us this thing is in a clear downtrend. Well, if we could get it cheaper than what it's worth, that's great. But I want to get it cheaper than what it's worth when it starts to move back up. Okay? We don't buy stocks that's moving down. We don't try to catch falling knives, right? We want to buy stocks that's going up. Now, let's look at Netflix here on our structural chart with our key moving average, our key trend lines, horizontal support, and resistance levels. Well, as you can see, Netflix is right here at key support and resistance level. It's in the sideways channel that it's been in for pretty much since like mid-April, right? Well, it got into a pretty sideways channel here. So we notice that Netflix will move sideways, gap down, move sideways. Well, hopefully it don't gap down again. But we'll need to see it start breaking out. It's below rather, this internal trend line right here, as you can see. It traded up to it, got just above it, and it failed, okay? So that internal trend line is pretty strong, right? So we need to see Netflix get above that eventually, right? We need to see Netflix get above this internal trend line. You can see I identified the gap areas on this structural chart. Those are gap areas I just showed you a few minutes ago on the moving average chart. But this internal downward trending trend line, as you can see, we was moving sideways. We got above it for 1 day. The very next day, it traded below it, and it's been below it for the last 4 days. So we're going to need prices to get back above these resistance area here, get out of this sideways channel, get back above this downward trend line, and break above this sideways channel. When it does that, then it'll be maybe a little more interesting to look at. Okay, but for right now, it's a no-go. All right, but we're going to monitor it because this is really what we like to see, sideways movement. Hopefully it don't break down anymore and just keep moving sideways until it's ready to break out to the upside. We love those long sideways consolidations. The longer it moves sideways, the more powerful the breakout is going to be, and hopefully it's to the upside, okay? But if it's to the downside, maybe it'll be a short. Who knows? But now, let's just go straight. Let's go straight and look at the RSI. Well, let's look at the stochastic and MACD for a minute. Well, right now, you see the MACD is below the zero line, okay? I'm going to just expand this, and we're going to look at this very quickly here. The MACD is below the zero line, okay? Here's the MACD, right? This yellow line right here, all right? The moving average convergence divergence. This yellow line is the MACD. It's below its zero line, so it's still in negative territory, okay? And it's about to cross back below its signal line. The histogram here has been trending down as it's moving sideways. Look at the stochastic here. We got a bullish crossover well up here. All right, so that's very interesting. This is a good thing to identify. The price of the stock is moving sideways. But look at the stochastic. Topped out here, gave us a bearish crossover. The yellow line crossed below the blue line here. And look, as the stock is moving sideways, the stochastic is moving lower. That's showing us that prices, even though the stock price is moving sideways, but prices are closing lower and lower within this range over the last 14 days because the stochastic is trading down. That's telling us that prices are really trading down, even though you might not be able to see it that great because prices are moving sideways. This indicator here, the stochastic, is telling us that prices are moving down. Okay, so that's the stochastic and the MACD. Don't look that great. All right, now let's look at the RSI. The RSI is below the 50 level. Well, it's been like that since late December of last year, right? If I expand this a little bit, we can be able to see it a lot easier, right? Well, look, the stochastic been in negative territory back in December. It broke below the 50-day, the 50-yard line rather. I'm sorry, the middle, this horizontal yellow line is the 50 level. It broke below that. Trade got into oversold territory here, tried to get above it. It hadn't been able to really get above 50 and stay above it, okay? Traded close to it here, and we back below it again, okay? So we're on the wrong side of the 50-yard line. In other words, the sellers are in control of the momentum. The sellers are in control of the momentum, okay? Well, the money is not flowing out of it that hard because you can see with the check and money flow here, it's still positive, but it's coming down. That's not good. So it's starting to move closer to the negative here. Maybe it's going to get back into the red. The momentum is coming out and it's starting to try to get down to oversold levels. But the momentum is on the wrong side of the 50-yard line. So the sellers has the momentum. Let's look at really quick. Let's look at the ADX, the average directional index, right? The DMI. Let's look at that real fast. And as you can see, I'm going to expand it here, all right? The red line is above the green here, okay? Look right here. The red line is above the green, and it's above 20. It's at 34. That's telling us that the bears are in control because the green line is the bias. The green line is below the red, and the green line is at 15.10. It's less than 20, less than 25. So the sellers are in control. They got control of it. This yellow line tells us a trend. Well, it's pointing down. It's still a trend somewhat to the downside because the sellers are in control, but it's at 30.50. So anything over 25 tells you got a trend. So let's analyze this a little bit. So anything over 25 tells you got a trend, right? Well, with the red lines above the green, the seller's in control. This is sideways movement. The 50-day moving average, the 9-day to 21-day is all trending down. The yellow line's above 30, so it says you got a trend. So the trend is down, with the red line meaning that the bears are in control. So the trend is down and the bears are in control. That's what the ADX is telling you, okay? That's what the ADX is saying. So Netflix is not ready yet, but it's part of that FAANGMT. So eventually it has to get ready. Well, some of them may never get ready, but the majority of them are going to have to start breaking out when the market starts to rally, okay? I don't see how anything can happen other than that, okay? Well, the on-balance volume is pretty much telling you it's moving sideways and it's back below its previous high, okay? You can see that clearly right here. Here's the previous high, okay, right here. The on-balance volume is back below its previous high. As prices are moving sideways, the green line is the line of closing prices. It's moving sideways, but the on-balance volume has breaking back below its previous high. The accumulation distribution line, here's its previous high. It's below its previous high. So the volume is not coming in. It's no real large institutional support, institutional sponsorship. They're not buying this thing. So why should we, right? If the big boys and girls are not buying, the big investors not buying, why should we? Okay, let's take a look at the guppy. All right, look at the guppy for the Netflix. Look at the guppy for Netflix, okay? You can see the magenta line of closing prices are below the green shorter term moving average and below the longer term red moving averages, and all the moving averages are pointing down, okay? So the guppy is telling you the momentum is to the downside. There's no ifs, ands, and buts about it. So Netflix is definitely on the downtrend. No momentum, no institutional sponsorship. It's really nothing going on there. Let's go now to the weekly chart real quick. Let's see what the weekly chart is telling us, right? So here's a weekly chart of Netflix right here with our key moving averages. Well, right now, Netflix is below the white line, which is the 4-week moving average. It's below our 4-week moving average, the white line. It's below our green line, which is the 8-week moving average. Okay, the green line. And it's below our yellow line, which is the 13-week moving average. And it's below the royal blue line, which is trending down, pointing down, which is our 30-week moving average. So it's moving sideways for the last 2, 4, 6, 8, just say 8, 9 weeks. It's moving sideways. That's good. It's basing sideways for 8 weeks. Wonderful. But it's below all of the longer term key moving averages on the weekly chart. You know already. You've been watching the videos. You know I'm not trying to trade against that. Nowhere ifs, ands, or buts about it. Even though it's basing, it ain't happening. Okay? Look at the weekly chart here, all right, with our structural chart, right? You can see we're below these long-term support levels, which is now going to have to act as resistance, okay? Right here. The red line is long-term support levels right here at 204 and 191. We got to get above that. And look at this downward trend line right across these highs. We got to get above that. So until Netflix does that and get above those key moving averages, it's nothing to talk about, right? And we need to see the green line on the ADX get above the red. Look how high the red line is above the green line. So on the weekly chart, the bears have been in control for a long time. And look at the yellow line, which represents the trend. It's pointing up and it's well above 25. So on the weekly chart, the ADX is telling us the bears are in control because the red is above the green. And the yellow line is telling us that we got a trend and the trend is down. So we got a downtrend on the weekly chart and we got the bears in control of the trend and the bears in control of the momentum. Hey, this is nothing to talk about. It's not happening. We got to see this improve. But what we're going to be looking for improvement is when it get above those key weekly moving averages, break out of that consolidation pattern on the daily chart, and get above this downward trend line on the weekly chart, and get above those key moving averages on the weekly chart. When we start seeing that happen, then we got something. Let's go look at the Ichimoku cloud on the weekly chart. It's really bad, okay? You know we had that cloud over our head. The weekly Ichimoku already proved to you a lot of people just made some pretty decent money because they were paying attention to the videos we put up about the cloud that was over our head. But remember, this is not financial advice. We're not financial advisors. We're not licensed. We cannot give financial advice. Nothing should be taken as financial advice. But wouldn't it be wonderful if it was? But it's not, okay? But look at this weekly chart of Ichimoku. The yellow line is below the magenta line. We got a bearish TK crossover from way back up here. The yellow line is below the magenta line. The price is well below the yellow line. And the future cloud, the future forecast, that is our weather forecast for the future, is looking cloudy and dim. The future cloud is down, okay? So it's bearish, all right? So this is just a wait and see. All jokes aside, this is a wait and see. Y'all know I like to have some fun. But this is a wait and see, okay? Ichimoku cloud telling us it's not no time to buy. That's for sure, okay? So now, let's look at lowest on the weekly chart, right, real quick. And we can see that lowest right now, if I expand this, okay, lowest is saying, hey, we've been moving sideways. We're in a sideways consolidation, okay? But it just broke below the blue line right here, okay, on the weekly chart for lowest. See it broke below it? That's nothing to try to buy. It's below lowest. It broke below lowest. Lowest is now going to get a line above it, okay, soon. And you can see lowest has been staying above on the weekly chart and riding this whole thing down. There's no reason to fight lowest. If you do, you're probably fighting a losing battle as far as we're concerned. Can't tell you what to do, but I'll tell you what we're going to do. We're not fighting lowest, all right? That's the weekly chart lowest. It's not looking good. It's still looking bearish. Let's go to a daily chart now and look at the daily chart lowest, and we'll finish it up with that. Because right now, you see where Netflix is at. You see what we need to do. We got key moving averages to break. We got key moving average to get above. We got key support and resistance levels and internal trend lines and outside trend lines. We got to get above. Okay, so it's a wait and see, but we're going to be updating. When any of these things firm up and start looking better, trust me, we're going to let everybody know. All right. Now let's look at lowest on this daily chart and we'll finish up with that. Okay, lowest on the daily chart is telling you the same thing. There's no need to fight her. She said, you want to fight, you're fighting a losing battle. Okay, so let's expand it. All right. As you can see, prices are below. The magenta line is above prices right here. And prices are finding resistance and staying below this yellow 21-day moving average and it's moving sideways. Don't even think about it. As far as I'm concerned, lowest is telling you it's not a go. We're still below the 21-day moving average. We've been trending below it for a while now. And lowest is in the red. And it's consolidating. So lowest still has to break out of this consolidation pattern. So until we see that, Netflix is a nice story. But it's not nothing we're going to buy right now. But you see where it's at right now. We're going to monitor it. We're going to watch it. It's one last chart I would like to show. This is the SW chart. One of my favorite charts. The SW chart. Okay. And it's a weekly chart. Here's the weekly chart, our SW chart. And as we can see, the prices right now is below all of the moving averages. This is a 21-week moving average. Okay. A 30-week exponential moving average and a 30-week simple moving average. It's below all of that. Prices got to get above these key moving averages on the SW chart before we would really like it and really get excited about it. And down here is the relative strength line, not the relative strength index, the relative strength line. It compares the performance of Netflix compared to the Standard & Poor's. And when this line is above this green line, when the red line is above the green line, that means it's outperforming the Standard & Poor's. Well, right now, the red line is well below the green line, which is the zero line. Okay, it's in the negative. Right now, it's negative 36.45. That means it's underperforming the Standard & Poor's by 34%. Underperforming the Standard & Poor's by 34%. It is a underperformer. We like stocks that's outperforming the Standard & Poor's. We like to see this red line above the zero line in the positive, meaning that it's an outperformer. We like outperformers. If you're putting together a sports team, do you want underperformers? You want people that perform under their average performance? Or you want guys that's constantly making, or girls that's constantly making their personal best and outperforming the rest of the league and the athletes? Well, that's what you would like, right? So why would you want to buy a stock that's an underperformer? A loser, a bench warmer, a water boy or girl. You get the picture. We like outperformers. So Netflix is an underperformer right now. It needs time, but it's part of FAANGMT. We're going to watch it. One day it might bounce. These FAANGMTs, a couple of them may never turn around. A couple of them may take a long time to turn around. But I'm telling you, a couple of them is going to go to the moon. See you in the next video.